So it's fine now. First of all, Assalamu alaikum. Sorry for late by 13-14 minutes. As an introduction, first I like to have the introduction of all of you. I know many of the faces. So I am interested to know your current ACCA status, which papers you are going to attempt in March, and the leftover professional exams. Inshallah. Okay. December. So how was AAA? Okay. Why is that so? Like you celebrated the completion of fundamentals. That's valid. Good to know this. Last attempted F9, F8, F9, not exactly same. And first paper of professional. Okay. What about you? Last ACCA paper. So you are done with. So any result to be awaited in January? No. So not attempted any paper in December. Why is that so? Okay. Okay, good to know this. From the online side, Abdullah, Noman, Marhaba, but can I have your feedback on the same lines? Okay, noted, Noman. Marhaba and Abdullah. So you are so confident that that's why you are going to try better. And Marhaba, you left, please. Okay, that's good. So to Marhaba, your ATX and SBL are left. SBL given in December. So that's good. So that would be your last professional exam, inshallah. Okay, good to know about all of you. I hope many of you people know me, Qumber Raza, working in Stand Chartered since last 6 years, 6.5 years to be specific. And I've been teaching ATX for like more than a decade now. So I have approximately taught more than 40-45 sessions of ATX. So let's start with the first ATX for March 23 session. Noted your comment. Okay, to answer this comment, I like to know in which attempt you guys attempted your TX exam. March 22. Mashallah. June 21. I honestly, I'm not pointing out, but I oftenly quite surprised if someone says I don't recall, because even today, I do remember which paper I attempted in which attempt. So I can tell every attempt in which I give any particular paper. And to some extent, I even recall the marks which I obtained. Okay. Yes, Aman. September 22, 2020. Attempt like March, June, September, December, March 20. 19 is the oldest one till yet. June 22, December 21. Marhaba, again you left. At least you can share the year if you don't recall exactly attempt. 1 year back. So make it either it would be March 22 type of thing. Well, interestingly, I, as a tutor of ATX, I realized one fact, which is ATX is a kind of a paper which everyone forgets immediately after the exam. I don't know why, that's the bad thing about the TX, but this is fact. Like, I understand for the ones who even attempted 2 sessions, 3 sessions back, or 4 sessions back, they even do not they recall high level names of the topic, the high level things, but they do not recall exact things. Like in F7, we do remember the financial accounting standards. I don't know why, but it remains in the discussion with our juniors, with our seniors. Same thing goes for the audit. Same thing goes for the financial management performance measurement. But TX is kind of a paper which we forgot. Half we forgot after the exam, and remaining half we forgot after the result. So while teaching to ATX, my default assumption is no one remember anything from TX. So that is my that's the practical assumption which I always take, because in your case you are a year old, we have 3 years old. That's good to hear that you remember a little even. Just to share with you, in the ATX, there is 100% of TX, which we will be revising, and some new areas of ATX, which we would be understanding. So I have very clearly used the word. Why I am using the word revising? Because I know you guys are aware of this. I just need to brush up the concepts relating to TX. Like, you guys are aware, that's why you guys have passed the TX exam in earlier. But due to the time gap between TX and ATX, it's somewhat in back of your mind. So I need to revise that so that all of these concepts become upfront. And for new areas, we need to have a very clear understanding. So this is a high level division between ATX and TX syllabus. Unluckily, yes, because if this is done at your end, for example, this is a very little area. So in percentage terms, as part of ATX, this is, you can say, somewhat 65 to 70%. This is so that would support him or her in this area, obviously. And obviously, this is built up on these concepts. So if you are not clear with these concepts, you will not be able to grasp these new areas. So to understand these new areas, your concept of this thing should be clear. That's why I always took an assumption, you guys don't remember anything, and I build up this thing at my own. As part of ATX, there is approximately, you can say, 70 75% of tax in it, 5% of ethics, and the remaining 20 to 25% of tax planning. Just to give you a reference, what type of tax planning are we are tax planning, or you can say financial management. What type of tax planning or financial management I'm talking about over here? Financial management, let me first have word over this financial management. Over this financial management, my discussion is not around the F9 financial management element, as in like risk management, weighted average cost of capital. No. This financial management is a practical kind of financial management with respect to taxation. For example, if my income is, I'm just saying it with example. For example, my income is 20,000, annual income is 20,000. For example, on this 20,000, I'm supposed to pay a tax of 3,000. Okay. And my monthly expenses, my annual expenses are 18,000. My income is 20,000. Expenses are you can very clearly see there is a shortfall of how do you gonna manage this shortfall of 1,000? Is it like, can you request tax authorities? Tax authorities, my income is 20, my expenses are 18. Kindly give me relaxation and take the tax of 2,000. Is it practically possible? Practically possible, yes, no? Classify us as eligible for relief. I have studied tax some families are below average lifestyle, so they can get a relief. It's about family now. So for example, your father, your parents are not below that threshold. You are a new beginner, you have newly started a job, and this is your financials, your income, your expenses, and your tax. And this obviously this tax is a random number without any calculation. So how you gonna manage this shortfall? This is captured over here in the financial management or in this area of tax planning. Just to give you an idea, if someone recall, it's fine. If not, nothing to worry. In TX, there is a 10-mark CRQ on tax planning. Do you guys remember? If not, then it's perfectly fine. So that 10-mark CRQ is based on the tax planning. In the ATX, it has much more emphasis because this paper is like basic understanding is already there. Basic understanding, how to calculate the tax is there. We here in the ATX need to study how can we save our tax mainly. How can we save our tax? That's why it has weightage of somewhat 20 to 25% area. And obviously, you guys can apply all of this once you have the knowledge of so that's a very high level breakup, very high level breakup of the ATX. Now I'm going to have discussion on specifics of the ATX. Are you guys noting this? Yes, no. Okay, that's good. Good point to discuss. What about ethics? In ATX, okay, not in ATX, throughout the ACCA, ethics are same, like 5 fundamental principles of ethics. Professional behavior. Threats to independent, 5 ethical threats. The threats remains the same. What change is, for example, in time of F8 or P7, your capacity to think around the ethics was as an auditor. For example, at time of SBR, the capacity to think on these parameters was as the company management. Here, we are generally the tax consultant. So here, the capacity would be as tax consultant. So what could be the ethical issue? For example, one company is my client. One company is my client for tax purposes. And the director of same company has approached me for the tax advice. The director of same company has approached me for the tax advice. Is there any ethical issue? Is there any ethical issue to give advice to the company, to give advice to the director of that company? Is there any ethical issue? Do you guys feel any ethical issue? Maybe the tax consultant can not draw line between tax evasion and tax avoidance, and as a result, the director can artificially and the tax authorities deduct allowable expenses. Okay. Any ethical issue do you guys feel if I advise to a company and to a director of that company? Any ethical issue do you guys feel? Yes, no? No, okay. No. Any ethical issue do you feel in this situation where I, a tax consultant, is giving advice to a company and the director of that company? Do you feel any ethical issue? There can be potential conflict of interest. Potential, right? How it can be conflict of interest? Probably one advice would be suited in the best interest of the company. That would not be in the best interest of the director. And maybe if one advice is in best interest of the director, is it necessary that it would be suited to the company? The answer is no. So such type of ethical issues would remain here. So the boundaries of ethics remains the same. 5 ethical principles, 5 major threats, that remains the same. What change over here is your capacity is changed. Here you will be thinking about the ethics and capacity of tax consultant, tax manager, tax partner of the entity. This would be your parameters to think around the ethics. I very clearly repeat, the ethical principle remains the same. It's not like in ATX we are going to study any new type of ethics. No. EPSM, ethics and professional module, is constant for all of the ACCAs, right? Whether you have opted AAA, whether you have opted APM, AFM or ATX, EPSM remains the same. In the same way, ethics remains the same, just your capacity is changed, nothing else. Now I'm going to have discussion in very much detail. Sorry, I missed to read your answer. The tax planning that would save the company tax would not necessarily be the best course of action for the director. Familiarity and self-review threats will arise. Okay, I'm going to discuss the syllabus of ATX in bit detail. The broad sections are income tax. Can you please name the topics which you guys covered in TX and income tax? First of all, trading income. One by one, please. Trading income, property income, pension income, interest or savings income, dividend income, and good. I was waiting for that. Allow me to take the exact topic name, which was employment income. And that's it for the income tax. Link to this topic. Link to this topic. Partnership and pension payment or gifted donations. I'm just writing the high level topics name. Okay. And anything topic name, not any specific in income tax. And national insurance contribution, NICs. Like I'm expecting after reading these names, at least, like there will be a switch on in your mind. Yeah, there was somewhat NIC. Yes. So that's fine. Just to share with you. Trading income. All trading income is in ATX plus some new areas. So property income. All same to TX, nothing new. Pension income plus some new areas, or you can say more in-depth discussion on the pension income. Interest or savings income. And employment income. Can you please name some of the items of employment income? Salary, benefits, car benefit, good. Fuel benefit, mobile phone, good. Asset usage, gift benefit. Medical benefit. Travel. Done. Perfect. All of the F6 related employment income is here, plus small new areas here. Partnership. all same. Losses, all same, plus some in-depth discussions. In the same way, pension or gifted donation, all same, plus there are some in-depth discussions around it. NICs. Can you please name NICs if you recall? Good. Good. Class 1, employee-employer. Class 1A, 1A. Class 2, Class 4. These were the types of NICs. So NICs are nothing. Plus, one very important area in income tax is what do you guys understand from this heading, overseas? Abroad, good. Import, export, honestly has like, import, export has to do with the VAT element, but we are talking about the overseas aspects from income tax perspective. Imagine, is it possible? Okay. In times of your F6, if you guys recall, you guys would have studied about the residency. Which person is to be referred as UK resident, which person is not to be referred as UK resident. Remember? Auto residency test, auto non-residency test, ties test, a table was given in the exam, right? That is the starting point to determine the residency. If a person is resident, he or she is supposed to pay UK tax or not. If a person is, for example, I am Pakistani, if I go to UK, I earned some money over there. Am I supposed to pay tax over there? Yes, no. This topic will guide you. Okay. In the same way, I am Pakistani. Sorry, I am UK person. I'm a UK, by birth, UK person. I went to UAE, for example. Am I supposed to pay? Am I still supposed to pay tax in UK or not? Such type of discussions would be covered in this overseas aspect. This is interesting. And important also. Then, second discussion. Second discussion is around capital taxes. In the capital taxes, the first discussion is around do you guys recall this name at least? Capital gains tax. Only the name. That's it. Any further thing from this? CGT. Wow. Impressive. Good. Okay. The residential properties tax. Correct. Whatever you say, I will say correct. Nothing else. Okay. In the capital gains tax, there are two major areas. One is the tax calculation, like capital gains tax calculation. And second one area was about the probably one of the most hated area of capital gains tax and TX, reliefs. Can you please name some of the reliefs? Spouse relief, spouse gift, okay. Spouse gift relief. That was not part over here, seriously. Yes, you are right, but that's not part of this. Good. Anyone? From the online side, gift relief. Noman, Ahmad, Marhaba, Mariam. Your feedback would also be appreciated. Gift relief. Good to hear this, Mariam. Roll over relief. Hold over relief. And I'm just listing out the names, nothing else. Just, your memory test. Even I'm glad to hear these names. One was, if someone recall, PPR stands for Principal Private Residence. Well, the key takeaways, tax calculations are exactly same. In reliefs, all TX reliefs are here, plus some new reliefs we have to consider. And here also, in capital gains tax, we have the topic of overseas aspects. Capital gains tax implications of overseas person, whether they are supposed to pay capital gains tax or not, kind of discussion. In capital taxes, I first marked capital gains tax. Second, your favorite, Six hours. No, it should be 8 hours. I don't mind to repeat the history. Inheritance tax. Do you guys recall anything about inheritance tax? Good one. Good. Something was called as PET. Something is called as CLT. Something was 40% tax rate. Good. Any further thing? No. Great. Great. Theory. Just to share with you, the IHT, which you have studied in your F6, is like 40 to 45% of ATX IHT. So it means approximately in IHT, 55 to 60% of area and obviously along including this 55 to 60% new area, there is one thing which is ATX has much more emphasis on this overseas aspects. You will Observe this thing in each and every topic. Each and every topic. Like some UK person died in some courses. Or vice versa. Or vice versa. So this possibility, a UK person died in some other country, or other country person died in UK. Chargeable estate and things that could be used to reduce it. That's nice. One more thing. A small topic, but yes, it's a topic which is called that's entirely a new area, but a small topic. Make it, you can say, max 1 hour discussion only, a very small topic, but part of capital taxes. Next. Corporation tax. In corporation tax, there are 3 to 4 broad categories. The first broad category is corporation tax calculations. What will be the tax rate? By the way, what was the corporation tax rate? Great, 19%, right? So I'm fine if you guys even recall the corporation tax rate. Then there were losses for a company. There were good group aspects of losses. Just to share a name with you, group losses, group capital gains group. And being TX tutor, I do realize one thing. No one understands this properly in TX. Last, not the least, so in every area, in here we have a lot of new areas. It is same plus group aspects. One of the favorite, how can I forget? Overseas would be addition. So, complete TX VAT is here. And the complete TX VAT comprise, you can say, 75% of ATX VAT. Make it 80% of ATX VAT. Approximately 20% are by the way, in TX, there was overseas aspect also. If you guys recall, within European Union, outside European Union type of discussion, if recall, otherwise I don't mind, like that's perfectly fine. So that was the broad breakup of the syllabus, and in addition to all of that, some new areas include comparison between different options. Just to give you a reference between comparison between different options. I am a company. I need finance. I need finance. I have two options: to go for the equity finance, to go for the debt finance. From a tax perspective, what are implications if I go for equity finance? And what are the tax implications if I go for debt financing? So this kind of discussion, I understand you guys have discussed this in your F9 studies, maybe, but in F9, the objective was to compare the financial aspect. Here, the objective is not financial aspect. Here, the objective is tax aspect, which has a lower tax cost and which has a higher tax cost. First possibility. Second possibility, the option of lease versus buy. If we go for lease of an asset, what will be the tax consequences? If we go for buy, what will be the tax consequences? So here again, you guys would have studied this earlier, but there the objective would be to assess the financial element, which is financially viable. Here the objective is not financially viable. Here the objective is which has a lower tax cost and which has a higher tax cost. After this, the next element is around anti-avoidance legislations. What do you understand from anti-avoidance legislation? This is a complete new terminology which you guys would be hearing. Anti-avoidance legislation. Okay. And any feedback? What would be the anti-avoidance legislation? Any idea? You guys understand the difference between tax avoidance and tax evasion? Yes, no? What is avoidance? What is evasion? One is legal, one is illegal. Agreed. Which one is legal? Avoidance is legal and evasion is illegal. Agreed. Any further difference? So how to achieve the avoidance? Avoidance is basically you identify the loopholes in the tax system. You use that loopholes for your tax benefit and save the tax. Avoidance. Evasion is understating your income, concealing your income, overstating your expenses, making ghost expenses, for example. Provide incomplete information, inaccurate information, false information. All of these things are tax evasions, right? Full stop. Avoidance is legal. Agreed. Can it be unethical? A sweet and simple question. Avoidance is legal. I agree. Can it be unethical? Like, what is superior? Ethics is superior or law is superior? It's always legal. Maybe I, honestly, maybe I, with respectfully, not 100% agree with this. Ethics is always correct. Do you guys agree? I guess not. Am I allowed to tell a lie if my lie saves someone's life? So is it illegal to tell a lie? The answer is yes. But would it be ethical in this situation? Yes. Which is superior? Always the ethics is superior, because legal is bare minimum. You have to do this. But in addition to have to do this, there is always the minimum, your own policies, procedures, principles to live, which should never be compromised. That is your ethics. So ethics is always superior. Tax avoidance is not illegal, but can it be unethical? The answer is yes. Best example. If you guys recall, there were so many spouses related exemptions in tax. Spouses related exemptions, so many. But imagine if I am making a fake marriage, you can say paper marriage, to save the tax. It is avoidance? Yes, because legally that's my spouse. But is it ethical? The answer is no. The answer is no. So tax avoidance is not illegal, but it can be unethical. Where you are, listen to this statement carefully, where you are creating a false legal structure to save the tax, wherever you are creating a false, or the better word is to use artificial structure to save the tax. Okay, tax is my expense, income of tax authorities. I am saving my expense via tax planning, via tax avoidance. I am saving my tax. On the other side, it is impacting the revenue of tax authorities. We agree? Tax authorities can't do anything for the tax avoidance. But if they found that tax avoidance is by means of artificial structures, they really don't like it. And to avoid that thing, they make certain rules, regulations to avoid the tax avoidance. And the rules, regulations which they make to avoid the tax avoidance is called as anti-avoidance legislation. Too importantly, so anything which is not genuinely reflecting your true, which is not reflecting your substance of the transaction, they really don't like that. And one of the best example is at the moment as a day one of ATX, paper marriage, claiming she or he is my spouse, saving the tax. You are saving the tax by document. Yes, he or you are spouses, but is it really the case? Is it a substance? The answer is no. That's only the legal status. So such to protect such type of tax avoidance, there are anti-avoidance legislations. Okay. I'm done with the discussion. Any question till yet? Handouts, topic wise. The next, ATX paper format. Since based on the initial feedback, I do recall some of you guys are attempting first professional exam. In ATX, there are two sections. Section A, Section A consists of two questions. Question 1, question 2. Question 1 would be of 35 marks. Question 2 would be of Section B, 40 marks. Okay. Question 1, 35 marks. Question 2, 25 marks. 3 and 4, 20 marks each. In section A, mostly in question 1. Mostly in question 1. For professional marks. By the way, I do recall some of you have already attempted the other professional exams, right? AFM, AFM, first, all three. Okay. So you guys would have an idea about the professional marks. How much professional marks for AFM? 20. 20. 20. For ATX, this is the last attempt, March 23 of 4 professional marks. From June 23 and onwards, from June 23 and onwards, there will be 20 professional marks in ATX as well. So in ATX, the 4 professional marks, it would be last attempt. 4 professional marks plus 5 ethics marks. So you can say out of 100 marks paper, 9 marks are non-text marks. Like for 9 marks, there is nothing to do with the text. For 91 marks, there are text related stuff. Okay. Generally, the ethics marks are part of question A, although it can be part of question number 2 also. Either, okay, in section A, there will be not up to 5 marks on VAT for sure, always. Whereas in section B, there can be 5 marks, there can be further 5 marks on VAT. And I've used the word further. So further means in section B, not necessary to have the VAT in section B, but in section A, VAT is compulsory. And it is generally in question 1. Generally in question 1. By the way, the question 1 and 2, from a book perspective, they are like 2 to 3 pages of scenario. From a book perspective, they are 2 to 3 pages of scenario. And this is like a 1-pager scenario. Okay. For question number 1 and 2, especially the professional marks, like we will be discussing, obviously, how to attempt the paper, how to attempt the question on CB platform, but obviously not in the first class or second class, towards the ending of the classes. Myself, we will be guiding to you guys how to attempt the questions on the CB platform. We will keep separate sessions properly to guide you people how to attempt it. Okay. Paper format discussion done, syllabus discussion done, timetable. Timetable, Tuesday, Wednesday, Thursday, Saturday. I understand that, like Sir Fahim just shared with me, it's a bit little different if something is communicated to you guys. Tuesday is somewhat 6:30 to 9:30 by Sarja. Thursday, 6:30 to 9:30 by Sarja. Currently, the Maghrib prayer time is 5:45. If I'm not wrong, after 1 week, the time will start going up, like, right? So for Saturday, let's keep it 6:15. Let's keep it 6:15 to 10. And 6:15, reason being considering the prayer time, right? And if the prayer time touches around 6 or 6:05, we will further drag it up. That's not commitment. No commitment on this. On Wednesday, I have two options. So I will be very open and very open for the discussion. For me, for second class, I have two options. Option one, to keep it on Sunday, somewhat 2 to 5:30. And one option is Wednesday, somewhat 7:30 to 10, make it. But if I keep for Wednesday, from my side, it would be online only. And if I keep it for Sunday, that would be physical. So all of these, I can't write only with physical. So make it, thank you. I use the word hybrid. If I give you people the choice, Sunday versus Wednesday. Sunday. No issue. Sunday, like due to the hybrid element. Still at 7:30, you are not sure. Okay. Anything would work. So at 7:30 to 10 p.m. I don't mind to keep it on at 9:30 a.m. That's the spirit, my boy. So honestly, the reason being I was considering Wednesday, I am more tilted towards Wednesday. That's the honest thing. And the reason for Wednesday is I want to keep Sunday as my back pocket for a rainy day. So, but and the ideology behind Wednesday online is like, by the way, how many of you are working? Where? Dow University. Okay. No. HOH. House of Habib. Okay. Head office. No. So I keep it to Sunday. So you're not free by 7:30 even. Online is the issue. Other way around, I can say we relax at Sunday, do a revision on Sunday. You would have complete Sunday with you. Wednesday, Sunday. Sunday. Wednesday. So I'm not taking feedback from the online ones since it should not make as such difference for them. Correct my understanding if otherwise. So at the moment, not tomorrow. At the moment, not tomorrow. I can keep physical class for 1 or 2 Wednesdays. For 1 or 2 Wednesdays. But considering a finance professional, December annual year end closing type of thing. So probably in January, either I will go for this option or will follow this option. We will discuss, we will decide. I'm open for the discussion, but at the moment, for this week, for next week, we are keeping it hybrid on Wednesday. Okay. The default is Wednesday. So if any issue, and if we all of majority of us do not agree on this option, then this will be the option. So default is this one. For 2 weeks, it is hybrid. For 2 weeks at least. Anything further? So no tomorrow class, no tomorrow if it is already in schedule, no class on Sunday. We will be having our next class on Tuesday with Sarzia. The course will be divided approximately equally between myself and Sarzia. So approximately 50% of the topic will be covered by Sarzia. 50% of the topic will be covered by myself. Okay. Anything which any of you want to clarify? Yes. Good question. I reserve this. Any further? So just asking, what do you expect how long the closing takes place? Just asking. Do you have any idea? You are giving me the answer. So honestly, not exact 3 months. So it's like 1.5 to 2 months. So from January 1.5 to 2 months, we are talking about mid to end of Feb. No time to shift back. So that's why. But nevertheless, we will discuss and we will decide. That's a promise. Okay, so no class on Sunday. Tomorrow is 18th. Fine. Let's take a 10 minutes break so that we can start a topic after the break. Okay. Online ones, I didn't hear anything from your side on the timetable thing. If you have any feedback, please do let me know. Not as such, honestly. It's 7:18 by my watch. Let's resume at 7:35 p.m. I hope that captures the prayer time also. Okay, so a 17 minutes break. Thank you. Thank you, Abdullah. Online ones, can I have the feedback from all on the timetable thing? Okay, we are going to start our first topic today, which is capital gains. For the online ones, I will be sharing the notes in the Google Drive after the class, and going forward, I will make sure to share these notes with all of you guys before the class. So considering first class, allow this irregularity, but that's a promise going forward. All of you will get the notes before the class. Google Drive. Okay, so Samir, please do the needful. Uncopy. You have it. Thank you. Online ones, I hope you have noted this comment. Like going forward, I will make sure to share the notes with you guys before the class. For the first class, please accept this irregularity. Okay, so we are going to start the first topic, capital gains. But before starting capital gains, some discussion about the tax rates. You guys recall the terminology fiscal year. How to define fiscal year? How to define fiscal year? In simple words, tax year. What do you mean by the word tax year? What do you mean by the word fiscal year? It is the period. It is the period for which we calculate our tax. In every country, in every jurisdiction, this tax year differs. In Pakistan, the tax year runs from 1st July to 30th June every year. Whereas in UK, it starts from 6th April, ends on 5th April. The current examinable fiscal year is from 6th April 21 to 5th April 22, and it is represented as fiscal year 21-22, or in further abbreviation, it is referred as fiscal year 21-22. Okay. Sources of income for individual. The sources of income, like we discussed a few moments ago, the sources of income for individual are property income, employment income, trading income, interest, dividend, pension. The sum of all of these incomes are called as total income. From the total income, we deduct personal allowance to arrive at taxable income. I repeat, at the moment, my main discussion is not around the income tax. My main discussion is around the capital gains. But to start capital gains, I need to have some understanding of these tax rates. That's why I'm discussing this. Personal allowance. The personal allowance for the tax year 21-22 is 12,570. The personal allowance for the tax year 21-22 is 12,570. From the total income, we deduct personal allowance to arrive at taxable income. What is personal allowance? Like, what is personal allowance? Correct. It is the minimum amount up to which there is no tax liability. Any person who earns beyond 12,570 are supposed to pay the tax on the excess amount, Imagine if a person has total income of 30,000, for example, not 30. If a person has total income of 40,000, he or she would get personal allowance of 12,570. Then taxable income would be 40 minus 12,570. 27,430. This is taxable income. On this taxable income, we will apply income tax rates to find out the income tax liability, right? Example 1. Example 2. If total income is like 80,000, personal allowance 12,570, taxable income would be 67430. If the total income is, for example, 9,000, let's say, for example, if the total income is like 9,000, then personal allowance would be 9,000 restricted. As a result, taxable income would become. So based on this, I can comfortably say that personal allowance is something which can reduce the income up to nil. Personal allowance cannot create a loss. Like due to personal allowance, the answer can never ever be in negative. It can be to nil. It can never ever be negative due to personal allowance. Okay. Then we have the taxable income. On this taxable income, we will be applying income tax rates to find out the income tax liability. What are the tax rates? If the income is from 1 to 37,700, the rate of tax would be 20%. The 20% rate is called as basic rate. If the income is from 37,700 to 150,000, then amount exceeding 37,700, the rate of tax is 40, and the 40% rate is called as high rate. The high rate is still 150, and the income, if it exceeds from 150, the excess from 150 is gonna tax at the rate 45%, and the 45% rate is called as additional rate. Done. Needless to say, these rates would be given an example. Okay. The persons who pay tax at basic rate, like who have income from 1 to 37,700, who pays tax at basic rate, are called as basic rate taxpayer, BR basic rate TP taxpayer. The person whose income is from 37,700 to 150,000 are called as high rate taxpayers. And the person whose income exceeds 150,000, such persons are called as ARTP, stands for additional rate taxpayer. Let's have some examples around this application of tax rates. For example, a person has total income of 30,000. A person has total income of 30,000. You are supposed to find out the taxable income and income tax liability. Okay. Total income 30. Personal allowance, taxable income, it is 17,430. Please like support me in the calculations. 17,430 is the taxable income. 17,430, that complete amount falls in the basic rate. So on this taxable income of 17,430, the tax would be at the rate which amounts example 1. Any confusion, any question? Heading towards example number 2 on the next page. Example number 2. For example, total income is 80,000. You are supposed to find out the taxable income and income tax liability. Total income is 80. Personal allowance is, taxable income is 67430. To find out the income tax liability, it would be like from 0 to 37,700 up till 37,700. Rate of tax is like 7540. And the amount which exceeds from 37,700 is 67430 minus 37,700 is, thank you, 29,730 at the rate 11,890. As a result, income tax liability amount 11,892. Income tax liability amount online side, please do share your feedback if you have any queries. Should we start example 3? Should we start example 3? Okay, in example 3, taxable income is 195. I repeat, taxable income is 195. Taxable income means it would be after deducting personal allowance or before deducting? After. So am I supposed to deduct personal allowance again? No. So this is 195, already a taxable income. So no need to deduct personal allowance again, right? As an advice, read the statement carefully, what amount is given to you guys. If it would have been total income, then I would have deducted personal allowance from it first. But since it's already a taxable income, so no need to deduct personal allowance again. Starting applying the tax rate from 0 to 37,700 up till 37,700. Rate of tax is 20%, which is like 7,540. Then high rate band is still 150,000. So 150 minus 37,700 is 112,300 at the rate then the amount which falls in the additional rate is 195 minus 150 is like thank you, Numan, for the feedback. As a result, income tax liability amount 72. Hold on. I like to have one more example. And you guys are doing it right now. You guys are doing it right now. The taxable income is 235,000. So again, just highlighting one thing, it's already a taxable income. So no need to deduct the personal allowance. Directly apply the tax rates to arrive at the income tax liability. Nine zero seven one zero. I don't know the answer. I'm relying on you guys. Thank you, Abdullah. Can I have more feedback from the online side, please? I have one endorsement for this answer. Two endorsements for this answer. Same. Online side, Noman, Hamad, Marhaba, and Mariam. Waiting for your answers. All of you guys done? Same. Thank you, Hamad. Thank you, Noman. Marhaba, Mariam. Both of you are left for the answer. Thank you, Marhaba. Different, same. So since all are same, so I am presuming this is the right answer. Again, I don't know what's the right answer. So since all are same, so I presume it to be correct. Moving forward, like that's a basic refresher of how to apply the tax rates. Now heading towards my main topic, my main first topic, which is about capital gains tax. At the moment, we are talking about capital gains tax for individuals. For a capital gains tax to be applicable, there must be a chargeable person, there must be a chargeable asset, and there must be a chargeable transfer. For a capital gains tax to be applicable, there must be three things. There must be a chargeable person. What do you mean by the word chargeable person? Chargeable person means the person who is supposed to pay capital gains tax. I repeat, chargeable person means the persons, the people who are supposed to pay capital gains tax. Chargeable person. Chargeable asset. Chargeable asset means the assets on which capital gains tax is applicable. I repeat, chargeable asset means the assets on which capital gains tax is applicable. Chargeable transfer. Keep remember, all of the capital taxes are applicable on the transfer of asset. I repeat, all of the capital taxes. We discussed 3 types of capital taxes: capital gains, inheritance, and stamp taxes. So these 3 are the examples of capital taxes. All of these 3 taxes are applicable at the time of transfer of asset, transfer of ownership of asset. Okay. By definition, capital tax means tax for transfer of asset. Transfer of primarily non-current assets. Okay. Chargeable transfer. So what is chargeable transfer? Chargeable transfer for capital gains purpose means it is applicable on sale of asset, be at market value or less than market value. Chargeable transfer means the gift of asset. So if you are gifting the asset to anyone, that would also be a chargeable transfer. Exchange of asset. What do you mean by the word exchange of asset? The historical traditional barter system, which we can say. For example, I'm giving, for example, calculator, taking up a pen, for example, or giving my car, taking a shares of a company, giving shares of a company, taking a land against it. So all of these things are exchange of assets. Okay. So exchange of asset is also a chargeable transfer. Last, which probably it would be difficult to explain considering the first class, the damage, destroy or stolen of asset is also a chargeable transfer. So I'm not explaining this thing right now, but keep in your mind, I will be explaining this when the relevant point came into play, the damage, destroy or stolen of asset. But at the moment, remember, you guys should be clear with the 3 things. Sale of asset is a chargeable transfer. Gift of asset, exchange of asset. Done. Now, chargeable person. Who are chargeable person? Which people are supposed to pay capital gains tax? There are 3 types of chargeable persons. The first type of chargeable person is UK resident persons, or you can say UK resident individuals. Individual means natural person, like me, like you, all of we. Biological. Correct. So natural person. So like there are 2 categories. Legally, there are 2 categories. One is natural person and one is artificial person. Companies are artificial person and all other are natural person. So that's correct. UK resident individuals or persons, UK resident companies are also chargeable person, like they are also supposed to pay capital gains tax. And UK trust are also a chargeable person. What is this trust? Like, any idea about this trust? NGO, non-profit organization? No idea. Interested about if the year is not eligible, so the trust can receive the property. Okay. Charity. Be clear with one thing. Here, the trust does not mean charity. So, sir, which trust are we talking about over here? Here, we are talking about, and just giving you an idea, we will be discussing this thing in detail. Do you guys remember a concept of chargeable lifetime transfer as part of IHT? IHT, that's correct. Chargeable lifetime transfer was transfer of asset to a trust. That was chargeable lifetime transfer. So this is So this is connected to that element. Okay. Like the CLT at time of. So we will be discussing the capital gains implication of these trust. It is not NGO. Honestly, it is not NGO. So what organization is this? Allow me to keep this discussion reserved for this time. First thing. Second thing, we are discussing the capital gains tax at the moment for means we are discussing capital gains for these persons. Okay. At the moment, as part of this handout, as part of these notes, I'm not going to talk about company. I'm not going to talk about trust. My main discussion is only around individuals. Done. Chargeable asset. What is chargeable asset? The chargeable asset means the asset on which we are supposed to pay capital gains tax. I repeat, the asset on which we are supposed to pay capital gains tax. On which assets are we supposed to pay capital gains tax? All assets are chargeable, like all assets are in the scope of capital gains tax, except of inventory is not in the scope of chargeable asset. Receivables are not in the scope of chargeable asset. And the following assets are exempt from capital gains tax. Motor vehicles are exempt from capital gains tax. National saving and investment certificates and premium bonds, one by one. Do you guys understand inventory? Yes, no? Yes. Do you guys understand the word receivables? Yes. Do you guys understand the word motor vehicles? Motor vehicles of all types. When I'm using the word all types, so what is in my mind while writing all types? Be it electric car, be it hybrid car, be it vintage car, right? Antique car, all type of motor vehicles. Sorry? Motor vehicles, not bikes, motor vehicles. Motor vehicles are only motor vehicles. Seriously. So at the moment, my discussion is not around motorcycles. My discussion is not around commercial vehicles, like I heard a word trucks or buses. So motor vehicles specifically. Trucks, buses, these kind of vehicles are not motor vehicles. These are called commercial vehicles. Okay. Motor vehicles, you guys are clear. National saving and investment certificates and premium bonds. Do you guys understand this? A clear yes or no? Yes. Yes. Okay. No. Please don't shy ever in saying no at the moment. So I'm here to change your no into yes. I will guide you, support you, but please don't shy in saying no. Online side, I'm lacking your feedback. National saving and investment certificates and premium bonds. So these are two separate things. One is premium bonds and one is national saving and investment certificates. Let me first have a word about premium bonds. What are premium bonds? What are premium bonds? Do you guys heard in Pakistan about price bonds? What are price bonds? Just taking an idea. What are price bonds? And okay, let's discuss this thing. Secondly, what are price bonds? Anybody of you invested in price bonds? Like I did in the past. Did once. Family, okay. Okay. Never. Family. Father, mother, elder, sibling. Not disclosed to you. Okay. Price bonds. So how the price bond works? For price bonds, there is an amount which you invest. There is a lucky draw type of thing. And if you are lucky enough to get your prize bond number in that lucky draw, you get a cash prize, right? Such things are called as prize bonds or premium bonds. Okay. Just for your knowledge, in Pakistan, these prize bonds are taxable. So if you win the prize, you have to pay tax on it. But in UK, these prize bonds are exempt from tax. Okay, these prize bonds are exempt from tax. Is under the ambit of CGT. National Saving and Investment Certificates. What is National Saving and Investment Certificates? Imagine, for example, I invested 100,000 in bank, not bank, let me rename it, in debenture or loan note. And after 5 years, I would get, for example, 160,000. Do you guys have heard about this type of arrangement? 160,000 obviously is exemplary amount. Have you guys heard about this thing? And during the life, for example, 5 years, would I get anything? During the life, you will get nothing. Great. Such things are called as. Have you guys heard about zero coupon bonds in financial instruments? Like that would have been part of F7, F9 kind of studies. Okay. That is the idea about. That is the idea. Okay. That's one thing. What is National Saving and Investment Certificates? In Pakistan, have you guys heard about National Saving Center? National Saving Center. Anyone can translate it into Urdu? Not only, seriously, not only. Correct. So National Saving Center in Urdu, it is called, probably someone would have heard its name in Urdu, that is Markaz-e-Qaumi Bachat. Qaumi Bachat. So what is National Saving Center? A bit discussion about the monetary system of the country. A step back. Economic system of the country. Economic system of the country is divided into two components. One is fiscal policy. Second one is monetary policy. Fiscal policy is governed, regulated with the help of the tax authority, i.e. FBR in Pakistan, HMRC in UK, whereas monetary policy is executed by Central Bank of the country. In Pakistan, State Bank of Pakistan. Okay. And FBR, the tax authority, and the central bank, both of these entities report to the finance ministry of the country, finance minister, which is currently in Pakistan. Okay. If government wants the money, Ministry of Finance wants the money, they have two options. Option one, raise the money via central bank, and raise the money via central bank is generally in the form of T-bills, treasury bills, investment bonds. What's the difference between bills and bonds? Bills are generally of short term, whereas bonds are generally of long term. Or the Islamic flavored or Islamic wrapped bonds, which are called as, you guys have heard about it, right? So cool. Right or wrong is a different story. Okay. This is one of the way to raise the money by the government. They ask central bank to issue the bills or bonds or sukuks to raise the funds. Option 1. Option 2. They can directly raise the funds from the public via the National Savings Center. So National Savings Center is not under the central bank. They are directly under the Ministry of Finance of the country. In F9, we mostly discuss about risk-free rate. What is the risk-free rate? Risk-free rate is the rate which is offered by National Savings Center. Risk-free rate is the rate which is offered by treasury bills, bonds, and for Islamic, the sukuks. Okay. What is National Saving and Investment Certificates? Coming to the point, concluding it. National Saving and Investment Certificates are the certificates. So certificate means a kind of loan note, a kind of, which are issued by National Savings Center, and they are by nature of zero coupon. They are by nature zero coupon. In Pakistan, it is not transferable. You have to hold till maturity, whereas in UK it is transferable. You can sell it out also. Imagine this is the arrangement. Invested 100,000, you will get after 5 years 160,000. I am Qumber Raza. I own this loan note, this certificate, and I sold it after 4 years for 150,000. Can I sell it out in UK? The answer is yes. I am selling out against 150. How much I have invested? 100,000. Am I gaining something? The answer is yes. I am gaining 50,000. So this 50,000 gain is exempt from capital gains because you are earning from National Saving and Investment Certificate. Okay. Third, I'm just reading the name. I request you to remember this name at the moment, not explaining this thing in detail. And it is shares of venture capital trust. What is venture capital trust? I'm not discussing it right now. That's a complete separate topic which we have to discuss in detail. Okay. Next, gilt-edged securities, treasury stock. What is gilt-edged securities? What is treasury stock? It is, you can say, treasury bills or bonds, short term or long term, either. Then qualifying corporate bonds. Do you guys understand qualifying corporate bonds? No. Okay. Qualifying corporate bonds. What are qualifying corporate bonds? I'm discussing it at the bottom of the page. Qualifying corporate bonds are loan notes which are issued by a company. Qualifying corporate bonds are loan notes which are issued by company, but with two characteristics. Characteristic number 1, issued in local currency. Second, redemption should only be loan notes. Qualifying corporate bonds are loan notes which are issued by a company with two characteristics. First characteristic, it should be issued in local currency. What do you mean by this? Issued in local currency? Like Pakistan, few days back, not days back, years back, issued Pakistan government, issued the loan notes in foreign currency. Are you guys aware? Yes, no? No? which is repaid last week or in last 10 days, which matured in the first week of December. So these kind of loan notes, are they issued in local currency? For Pakistan, the answer is no. For Pakistan, local currency is PKR. They were issued in which currency? Euro or dollar? No idea. So they were issued in dollars, but they are called as Eurobond. And why they are called as Eurobond? Let me tell you this thing. What is the definition of Eurobond? Eurobond, by definition, any bond which is issued in foreign currency is called as Eurobond. Not necessary to be issued in euros. For example, if US issued the loan notes in PKR, for example, that is also called as Eurobond. So it should be issued in local currency. Based on the discussion, I don't mind writing it. Not Eurobonds. Okay. And redemption should only be in cash. Do you guys understand this? Redemption should only be in cash. What does it mean? Good point. It shouldn't be convertible. It shouldn't be convertible, because if the loan note is convertible, it's the loan note holder discretion whether he or she takes up the cash or take up the shares, right? Equity or shares. Redemption should only be in cash. So on this statement, I can say is this thing clear? So if it is issued by government, it would fall over here or here. For national saving and investment certificates and gilt-edged securities, we're not discussed about the currency. So by default, it's always exempt. But for qualifying corporate bonds issued by company, it should be local currency and redemption should only be in cash. Not necessary. So I can dispose of in between also. So just if I ask you, can I sell out my loan note before maturity? Yes. So if I sell out my loan note before maturity, I would get some kind of either gain or loss. But this asset would remain exempt asset for capital gains purpose. Chattels. Do you guys understand this word chattel? No? Okay, I don't mind. So the word chattel will be covered probably on page 6 or 7 in detail. So page 6 or 7, maybe I could be wrong. Let me check it out. So it is on page number 8 to be exact. So we will be discussing this thing on page number 8. And the similar kind of thing, vesting chattel, we would be discussing this also on page number 8 today, inshallah. Done. So I not discussed this later on, and investments held in individual savings account. So 2 cross means not discussed. 2 red ticks to be discussed shortly. Apart from these 4 ticks, is there anything which is unclear to you guys? Apart from these 4 ticks, anything which is not clear? No? Moving ahead. if an asset is an exempt asset, any gain is not chargeable and any loss is not allowable. Let's discuss the first half. If an asset is an exempt asset, any gain is not chargeable. What does it mean? You are not supposed to pay tax on any kind of gain, right? Any loss is not allowable. What does it mean? Any loss is not allowable. What does it mean? We can't claim any reduction on that loss. Okay, we can't claim any relief on that loss. So if an asset is an exempt asset, that would be completely ignored for CGT purposes. No, not zero. We are not going to. So if I'm selling out a motor car, would I be considering it as part of my capital gain calculation? The answer is no. Ignored for capital gains purposes. Then chargeable transfer. Chargeable transfer, sale of asset, market value less than market value. Gift of asset, exchange of asset. These three things clear? Can you imagine any type of transfer which is not covered under this umbrella? Can you imagine any kind of transfer of asset which is not covered under this umbrella? Like whenever I transfer the asset to anyone, either it would be sale at market value less than market value, or I would give the asset to anyone. I would exchange the asset with someone. Is there any other thing which you guys can imagine? Okay. Okay, a good point. Lease of asset. Keep remember one thing. Tax is always based on the legal status. So tax is not based on the substance. So an accounting is based on substance over legal form. But tax is based on legal form. There is no concept of substance in the tax. Like you were referring to me, lease. Who owns the asset legally? If lessor owns the asset, it remains under the ownership of lessor. If under the lease agreement, there is an option to transfer the asset, doesn't matter. If the lessee exercise that option, at the time of exercise, it would be a chargeable transfer. If not, if I'm lessor, you are lessee, you use the asset and returned it back to me, whatever is the accounting, asset remains under my ownership. So no capital gain implication. Keep remember, two types of transfer are exempt from CGT. Two types of transfer are exempt from CGT. One type of transfer which is exempt from CGT is transfer on death. Is exempt from CGT because at time of death, assets are transferred from deceased person to their survivors, right? On such transfer, there is no capital gains tax. Second, transfer to charity is also exempt from capital gains. So there are two types of exempt from CGT. One is transfers on death are exempt from CGT, and the second one is transfer to charity is exempt from CGT. Is this thing clear? Anything in this page which we discussed and not clear? So I do recall we not discussed the concept of asset damage, destroy, stolen. We not discussed shares of venture capital trust, certain chattels, investment held in individual savings account, and vesting chattels. Apart from this, anything which is not clear? So the transfer means change in ownership of asset. Okay. If I sell out the asset, be at market value, less than market value, would the asset change its ownership? Yes, no. Yes, there will be capital gains tax. If I give the asset to someone, legal ownership of asset transfer or not? Yes, there will be capital gains tax. Exchange of asset. Who will bear it? That's a good question. The person from the person from whom asset is leaving the ownership is supposed to pay the tax. You can say in simple words, the seller is supposed to pay the tax always. This is the table which will be given in exam. I will be discussing each and every component of this table shortly in the next page. Okay, I will be discussing this thing shortly. Let's start the calculation of capital gains. Calculation of capital gains. For capital gain, there must be a disposal proceed. Okay, which can be abbreviated as DP. For ATX purposes, DP would not mean display picture. It would always mean disposal proceed. Then minus cost of disposal. What is cost of disposal? The word cost of disposal means a high level, a definition. The cost of disposal means any of the direct cost associated with disposal of asset. Any direct cost associated with the disposal of asset. Can you give me example of direct cost associated with the disposal of asset? Commission charges, best example, agent commission. Good. The carriage outward or delivery charges, if bear by the seller. If bear by the buyer, it's not my expense at all. It's not my cost at all, in fact. Right? So if bear by the seller, good, two things. Agent commission, salesman commission, or delivery charges, carriage outward kind of thing. Any further thing? Modification. Would it be part of cost of asset or would it be part of cost of disposal? It should be part of cost of asset. And it could be, for example, if there is any advertisement, asset specific, not a general advertisement. For example, in newspaper, old times, newspaper, for example, motor vehicle disposal, there is a separate advertisement. For every house disposal, there is a separate advertisement. So that is, and obviously such advertisement cost the seller. So such advertisements are allowed to be like part of cost of disposal. Specific to the disposal of asset. So not like a general advertisement in which you are advertising your products and along with the product you are advertising this asset also. Is it a direct cost? A simple question. The answer is so very clear. Definition is direct cost associated with disposal of asset. Last, not the least. What about dismantling cost? Should it be captured over here? Yes, no. Open for the feedback. Because one of your fellow raised this point, dismantling cost. Should it be part of cost of disposal? like decommission, dismantling. A direct cost associated with the disposal. Why you are saying no? I agree, but that's from the accounting perspective, right? From accounting perspective, correct me if I'm wrong. You record the present value of dismantling recorded in the cost of asset, right? And from the present value, you record the liability also. By the passage of time, liability remains unwind, which you record it in finance cost as an expense. At the time of disposal, completion of asset life, dismantling cost debit, cash credit, right? That's from the accounting perspective. From the tax perspective, we are not allowed to record the provisions. We are not allowed to record the provisions. Considering this provision point in your mind, dismantling cost, two options. Either it should be part of cost of asset or either it should be part of cost of disposal. Where should I record this? Dismantling, correct. It should be part of cost of disposal because it is something which is associated with the disposal of assets. So dismantling, decommissioning are also part of cost of disposal. Well, disposal proceed minus cost of disposal. Then we have the net disposal proceed. After this net disposal proceed, purchase cost. Do you guys understand purchase cost? Cash paid for the purchase of asset. Add improvements. You understand? All of the capital expenditures. Your modifications will be captured over here in the improvements. Okay. Purchase cost plus improvements. The sum is total allowable cost. From the net disposal proceed, we deduct the total allowable cost. If the answer is positive, it is capital gain. And if the answer is negative, such thing is called as capital loss. Okay. If the answer is positive, capital gain. If the answer is negative, capital loss. All improvements should be included. All should be included. Good question. I understand the reason for this question, but yes, all should be included. Would you call revenue expenditure as improvement? So there is a reason he asked this question, because in some other topics of tax, for improvement, there is requirement to take before fiscal year. In some other topics, not this one. So that's why he was asking this. You can ask motor vehicle as an example. I don't, please go ahead. That's perfect. Exactly. Okay. Anything further from the gain computation, capital gain, capital loss computation? Anything to ask? No. Moving forward. That was the disposal of one asset. For example, in a particular year, I disposed of 3 assets. For example, in a particular year, I disposed of 3 assets. On asset 1, for example, there is a gain. Asset 2, for example, there is a loss. Asset 3, for example, there is a gain. Okay. Asset 1 gain. This gain would have been calculated, would have been computed based on this pro forma. This loss would have been computed based on this pro forma. Right? Then I have total gains. Okay. So try to understand one thing. This total gain is the sum of 1 +1 -1. Okay. Then we have the total gains. From the total gains, we deduct annual exemption to arrive at taxable gains. On these taxable gains, the rate of tax would be applied to arrive at capital gains tax. Okay. Okay. Let me have some word around annual exemption. Let me have some word around annual exemption. The annual exemption is 12,300. The annual exemption is 12,300. The fixed constant amount given in exam. Fine. There is one similarity. Okay, what is annual exemption to be exact? Annual exemption is a similar kind of thing like personal allowance. Like we have personal allowance in income tax. In capital gains, we have the similar kind of thing which is called annual exemption. Okay. The conceptually both are same. Up to this amount, no need to pay the tax. For capital gains up to 12,300, no need to pay the capital gains tax. Even they have one very strong similarity, and the similarity is like personal allowance, annual exemption cannot create negative figure for taxable gains. Do you guys understand this statement, or do I need to explain it? Cannot create negative figure. You guys understand this? All of you? Sure? Correct. So it can be reduced up to nil, cannot create a negative figure. I can write it. Can reduce the gains up to nil. It's fine now? Okay. Taxable gains. Let's start with the taxable gains discussion. On these taxable gains, there are two types of tax rates. No, not two types. One is called normal rate and second one is called residential property rate. At the moment, let me first have word around the normal rate, then we'll discuss about residential rate. First, I want you guys to understand, to grasp the normal rate. Unlike income tax, capital gains has only two rate of tax. One is either 10% or it's either 20%. When to apply 10 or when to apply 20? When to apply 10 and when to apply 20? If complete or part of gains fall in basic rate, if complete or part of gains fall in basic rate was still 37,700. If complete or part of gains fall in basic rate, the rate of capital gains tax would be 10%. If complete or part of gains fall in high or additional rate, high or additional rate, whatever, capital gains tax would be at the rate 20%. When to apply 10? If complete or part of gains fall in basic rate, 10. If complete or part of gains fall in high or additional rate, 20%. Done. There is only one connection between income tax and capital gains tax, and the only connection is, like it's not the case that for taxable gains you will get the tax bands from the scratch. Means the bands would be first covered by the taxable income, then bands would be covered by the taxable gains. What does it mean? I repeat, just imagine, for example, this is a glass in which there is a marking of 37,700. There is a marking of 150,000. I hope you understand what are these markings, right? Try to understand this, please. There are two gentlemen, there are two persons who want to fill up this glass. One is taxable income who wants to fill up this glass, and one is taxable gains who want to fill up this glass. Okay. Who will cover this glass first? This glass would always be covered by the taxable income. So first this glass will be covered by the taxable income. Then this glass will be covered by the taxable gains. Okay. My discussion is still in process. Imagine a person has 20,000 of taxable income. And when I'm using the word taxable income, it means it is after deducting personal allowance, right? A person has 20,000 of taxable income. He has gains by 5,000. He has gains by 5,000. All of the gains, it would fall under the, like 20,000 income, 5,000 gains. The sum amount, 25. 25 is within the limit of 37,700. Means income is within the basic rate. Gains are within the basic rate. Done? In such situation, on these gains, the rate of tax would be 10%. Okay. Example 2. A person has taxable income of, let's suppose, 75,000. Taxable income of 75 means all of the basic rate would have been completely filled. Agreed? Till here, the tax band would have been filled. Do we understand this? And if now a person has 5,000 of taxable gains, they would directly fall under the high rate. And in such situation, the rate of tax would be, is this thing clear? Taxable gain. All are taxable things I'm talking about, unless I would specify. Is this thing clear? Because I need to discuss this part, which I have not discussed at the moment. So I need to discuss this. So at the moment, my discussion is only around this. 10-20 thing clear? When 10, when 20? I repeat again. When 10, when 20 clear? Online side, any question from your side on 10 or 20? 18 and 28 is not at the moment my scope of discussion. Okay. Okay, I'm heading towards the next page. I'll be back on this page to discuss the residential property element. But at the moment, heading towards the next page to discuss the basic concept around taxable gains. Sorry, to learn how to apply the capital gains tax rate. Example 1. For example, a person has taxable income of 18,000. A person has taxable income of 18,000. And again, very clearly, when I'm using the word taxable income, it means it is after deducting personal allowance. Taxable gains of 10,000. Again, taxable gains means it is done. It is after annual exemption, right? Please be with me. Try to understand this. Taxable income is 18,000, means within the basic rate. Then 18 plus 10, the sum is still in the basic rate. It means all of these gains fall in the basic rate. So the capital gains tax liability would be 10,000 multiplied by Is this thing clear? Clear? Example 2. Taxable income is 87,700. It means the person is high rate taxpayer. All of his basic rate band would have been filled by the taxable income. So the taxable gains would automatically fall in the high rate band. And since taxable gains automatically fall in the high rate band, hence the capital gains tax liability would be Is this thing clear? Third and the last. Not third and the last, second last. This is important example, third and fifth, like fourth, whatever. Taxable income is 30. Taxable gains are 10. Taxable income 30 means income is in the basic rate. But 30 plus 40, 30 plus 10, the sum amount. It means some of the taxable gains are in the basic rate and some of the taxable gains are in the high rate. How to compute such situation? 10,000. How much basic rate is available? Basic rate is still 37,700. Out of this 37,700, 30,000 is covered by the taxable income. How much basic rate band is available? 7,700 of basic rate band is available. So out of this 10,000, 7,700 would gonna tax at the rate, and rest of the amount would be exceeding the basic rate, which amounts at the rate. Kindly confirm. Example 3 is still any confusion? And you know, example 3 is the best example to illustrate the two statements. If complete or part of the gains fall in the basic rate. So example 1, complete gains fall in the basic rate. Example 2, complete gains fall into the high rate. Example 3 is part of the gains in the basic rate and part of the gains in the high rate. Done? Example 5, you guys are doing it. Now, yes, example 5, the answer is online ones. Please do confirm me the answer also. I don't know whether this answer is right or wrong. Feel free to calculate at your own end. One 1550. Thank you, Mariam, for the feedback. 1550. So Noman, Marhaba, Hamad, you guys are with 1550. 1150. Okay. Second. Okay. So 1550. 1150. You know, again, I don't know the answer, but I know one thing. It's quite difficult and there is a reason. How much basic rate band is available? 37,700 is basic rate. Your taxable income is. So how much basic rate band is available? 4,500. So out of 10,000, 4,500 at the rate 10%. Rest of 5,500 where was the error? Okay. Thank you, Abdullah. Okay. I hope now when to apply 10, when to apply 20 is clear, right? Right. A small discussion when to apply 18 and when to apply 28, the residential property. If the gains pertain to disposal of residential property, if the gains pertain to disposal of residential property, then on such gains, the rate of tax is either 18 or 28. Okay. If the gains pertain to disposal of residential property, then rate of tax should be either 18 or 28. So other than residential property, rate of tax is 10 or 20. If gains pertain to residential property, what is residential property? House, property, house, apartment, flat, bungalow, in which I live, right? In which I live. Someone live. So imagine I have a house which is an investment property. Investment property. IS 40 definition. Any property which is purchased with intention to earn rentals or for price appreciation or for both. I own a house which is held as investment property. Is it a residential property? That's what you clarified. Someone reside, not own reside. Remember? So if it's for letting purpose, I own the property and you are living in that property. I let you out that property. Still a residential or non-residential? You are living in that property. Is it a residential? Is it like, are you trying to say if owner resides is residential, if tenant resides, it remains residential, na? Like apartment by default, apartment is residential. If I live in apartment, it's residential. If I let you out and you are living in it, it's still residential. So residential can be for living purpose, for investment purpose. That's a different story, but it remains residential. It's not the case that if you are living, it's not residential. No, that's not the case. Okay. As it remains residential property. So for residential property, rate of tax is 18 or 28. And if I dispose of the residential property and gains fall into the basic rate, rate of tax 18, complete or part. And if gains complete or part fall in the high or additional rate, so the rate of tax concept is same, like we have 10 or 20. Just In case of residential property, this 10 or 20 will be replaced by 18 or 28. Nothing new will happen. Okay. So that's up to us. Two answers to your question. Everybody's clear with his question? Yes, no? No. His question is, if a person has one normal gain during the year and one residential gain during the year, so what will be filled in the glass first? Okay. Is it a rule? Is it up to us? What will be the case? Two answers. It's up to us. Answer number one. Point number two of this answer, the total remains same. The total text remains same. And I'm serious. Total text remains same. I can put an illustration to explain this. Let's put the explanation over here in this area. An example. A person has taxable income of, okay, 35,000, not used amount till now, 35. This person has residential property gains and taxable gains. Residential property, taxable gains by the amount 12 to differentiate, and normal taxable gains of 15. Okay. Your question was in the band. My answer is 2 points. It's up to us. Total tax remains the same. Okay. Now, let me first calculate if residential is first. Okay. If residential is first, how much basic rate band is available? 2,700. I hope I'm not very fast. 2,700 is the available basic rate band. 2,700 at the rate. Then 12,000 minus 2,700 at the rate 28. This is for residential property, right? Then 15,000 at the rate. Done. The total amounts. Agreed. Now, switching 2,700 into 10%. I hope you understand why I'm taking 10%, because now I am assuming the normal band will fill up the text band first. 2,700 into 10%. 270. 15,000 minus 2,700. No. 15,000 minus 2,700. Sorry, repeat. 2,460. Sorry, my bad. 2,460. Then 12,000. The sum. Needless to say, this belongs to normal. Mathematically proved. I repeat my statement. There is no restriction whether to tax normal first or residential first. Second point was total tax would remain the same. And you have mathematically proof of this. So the difference is mainly of 10% now, which is pushing into the next band. So here the difference is mainly of 10%, which is pushing up in the next band, right? So even if it's part of this one 1500, or if it's part of this one element, like in total in basic rate the amount is same 2700. If you put up this one, the additional 10% would be higher on this side. If you fill up this one, this 10% would become higher. That's only why the total remains the same. I hope that would be clear, Abdullah. Sorry, not Abdullah. Abdullah. Yes, sorry.
Is the annual exemption safe for residential and non-residential property by combining all the capital gains, or like you write road over here, residential property tax in separately with normal tax bill? So annual exemption would be available after netting of both the book.
So annual exemption is available on total gains. This total would consist of residential and normal both. This total gains would consist of residential and normal both. Point number one. Point number two, it is advisable to allocate annual exemption to ignore this thing if it's mentioned. We will be covering this thing in detail, however. That was the basics, very basic calculation of capital gains tax. Very basic calculation. Now heading towards a concept of capital gains, which is called as part disposal. Heading towards a concept which is called as part disposal. What is part disposal? How to use it? Type of stuff. For example, imagine I have a 10-acre plot. Okay, I have a 10-acre plot which I purchased for 100,000. I have a 10-acre plot which I have purchased for 100,000. Okay, 10 acres, 100,000. Out of that 10 acres for 100,000, after some time, I sold 4 acres for 500,000. I sold 4 acres for 500,000. So while calculating the gain, I should be recording disposal proceed. How many acres I sold? How many acres I sold? For amount of 500,000. Done. The cost should be, by the way, the 100,000 cost was for 10 acres. Can I deduct 100,000 from here? Can I deduct 100,000 from here? The answer is no, because 100,000 cost is for 10 acres. I am disposing of 4 acres. So cost should also be of, we agree principally. What will be cost of 4 acres? 40,000. I had 40,000. Right? What will be cost of 4 acres? Would it be 40,000? If someone is saying cost would be 40,000, then it means he or she is calculating it like, sir, 100,000 is for 10 acres. So it's like 10,000 per acre. And since you are disposing of 4 acres, hence the cost of 4 acres is like 40,000. Right? This could be the possible calculation which came into your mind for the calculation of 4 acres. I have a comment on with this methodology of calculating 40,000. And the observation for this methodology of calculating 40,000 is, it means you are assuming that the cost per acre is constant. It means you are assuming that cost per acre is constant. Assumingly, this is the piece of land. Assumingly, this is the piece of land. For example, this area is, for example, road facing. This area is towards the back side of the colony. On this side, for example, we have a boys' college. And on this side, park over here, like not necessary. So we have a park over here. So considering that this is the main road, the main highway type thing, and this is the back street. Considering the dimension of property, would you really believe the cost per acre would be same? No. And it's always the case, like not necessarily the cost per acre would be same. So in such situations, there is a concept of part disposal. In such situation, there is a concept of part disposal. When the concept of part disposal arises, the concept of part disposal arises in every situation where you purchase a larger asset and dispose of that asset in multiple transactions. Rather than selling out in one transaction, you are selling out the asset in multiple transactions. I repeat, you purchase a one larger asset and selling out that one larger asset into multiple transactions. Example could be the piece of land, purchase 10 acres, selling out 4 acres. Example 1. Example 2. Purchased a house, consists of ground floor and first floor, and selling out any one floor, either ground or either first. Would it be a part disposal? Part disposal. 2 examples. Example number 3. I purchased a 4 floors building and I am selling out any one floor of the building. Part disposal. 3 examples. 4th example. I purchased a house and then a garden area. Okay, house with a garden area. I am disposing of garden area, live in the house, or selling out house, live in the garden area. Would it be a part disposal? Yes, it would be a part disposal. 4 examples. I don't know. Right. Next example. I purchased a 7-seater sofa set. I purchased a 7-seater sofa set. Out of that 7-seater sofa set, I am selling out 1 sofa. Is it a part disposal? Yes, no. Yes. 6th example. For example, I purchased 7 these chairs. These 1 chairs. 7 or 10. Like for the online ones, you can assume it as like 10 plastic chairs. For example, I purchased 10 plastic chairs. And out of those 10 plastic chairs, I am selling out 1 chair or 2 chairs. Is it a part disposal? I purchased 10 plastic chairs and disposing of 1 or 2 chairs. Is it a part disposal? Yes. Sorry. Yes. So conclusion. Is it a part disposal? Yes, no. No. So sofa was not part disposal also. I don't mind your, I want to hear your understanding so that I can clarify that.
The assets originally joint trades form and we are removing it, so it will be a part disposal. But in this case, there is not a
71117. Oh, I'm serious. How the 7-seater sofa set? Correct. Correct. This is a 7-seater sofa set. Okay, that's a good point. So let me first conclude with the plastic chairs, then we'll come on the sofa element. So for plastic chairs, it's not a part disposal. Why it's not a part disposal? Because every single chair is a separate identifiable asset. You purchase 10 chairs. It's not a single asset. It's like 10 chairs. Imagine the invoice of chair. The invoice of chair would be purchased 10 chairs, unit price, X amount, multiply by 10, total amount is this one. Honestly, with respect to 7-seater sofa set, I'm hearing this first time. 15,000 per sofa. If 5-seater, 15,000 multiplied by 5, total is 75. No. If you notice the invoice of 5-seater or 7-seater sofa set, it says 1 7-seater sofa set, X amount, total is same. So it's not on per seat basis for sofa, never ever. So that's why I can confidently say that sofa is, every sofa is not a separate identifiable asset, right? Probably a lame example to share, but the perfect example. Imagine I purchased a 3-piece suit, 2-piece suit, coat and pant, 2-piece suit, okay? And due to ABC, XYZ reason, I'm selling out a coat. Is it a part disposal?
yes.
It is a part disposal because when you purchase a 2-piece suit, the invoice is not coat this amount, pant this amount, total this amount. No, the invoice is 1 2-piece suit X amount, right? Other way around. Imagine you purchased a pant and a coat and you are selling out a coat. Is it a part disposal? No, because the invoice is clearly the pant is separate, the coat is separate. If you are selling out any one thing of your choice, that would not be a part disposal because in the example number 2, coat is separate asset, pant is separate asset, right? So it's not at once or in bits and pieces. It's mainly for, like, if I'm purchasing a 4 floors building, the invoice of 4 floors building would be floor 1, floor 2, floor 3, floor 4, some, no, the combined amount, right? So this invoice creates the difference. And my earlier statement was, if you purchased one larger asset and selling out in multiple transactions. So first you need to establish it's a one asset or multiple assets. An example of plastic chairs, it's not one asset, it's multiple assets. For example, I purchased 10,000 shares of company X, 10,000 shares of company X, and I am selling out 2,000 shares of that company. Is it a part disposal? Is it a part disposal? 10,000 shares of company X and selling out 2,000 shares of that company. Is it a part disposal? The answer is no, because for shares, every single share of a company is itself a separate identifiable asset. Hence, in case of shares, there will be no concept of part disposal. Good one. Pair of shoes. If I purchased a pair of shoes, and selling out one shoe, lame example. It's a part disposal because the invoice again, it's not one shoe, it's one pair of shoe. Okay. Coming back to the point mainly was if there is a part disposal, be very clear. In case of part disposal, we are not struggling in calculating the disposal proceed. What our main point of discussion is, what will be the cost, right? In case of part disposal, the cost of part sold is calculated as market value of part sold divided by market value of whole asset. In this example, the whole asset is of 10 acres. The whole asset is of 10 acres. So market value of part sold, like market value of 4 acres, market value of whole asset means the market value of 10 acres multiplied by original cost. Original cost in my example is, okay. So if I were to calculate the cost of part sold, the cost of part sold would be market value of part sold divided by market value of whole asset multiplied by, in my example, market value of part sold is market value of whole asset, complete 10 acres, 1 million plus 500,000. Multiplied by original cost. What is original cost? So as a result, cost of part sold is so in such situation, every floor is a separate identifiable asset for him. So then even no issue. The DP would be of overall building. Cost would be sum of floor 1 plus 2 plus 3 plus 4. This would be well, the gain amount listen clear. Okay. What will be the cost of unsold part? What will be the cost of unsold part? Because this 33,333 is for 4 acres. What will be the cost for remaining 6 acres? So cost of unsold part can be calculated in 2 ways. One is lengthy approach and one is simple approach. I'm going to share both approaches with you. Cost of unsold part. If I reverse this formula, what do you guys say? If I reverse this formula, cost of unsold part would be market value of divided by multiply by. Do we understand this formula? Alternatively, I can calculate it as total cost minus total cost is 100,000 minus cost of parts sold. As a result, is this thing clear? Can you calculate it from the lengthy formula? Cost of unsold part. Market value of part unsold. The market value of part unsold is 1 million divided by market value of whole asset. Original cost in financial reporting. Even they in Pakistan as well, not very much matured, but in UK, we have a proper certification of property valuation services. So in Pakistan, we do have such concept, but it's not very mature. Even in UK and US type of countries, even in UAE, they have a property price index also. Property price index.
Index of different locations there.
Is this thing clear? One more discussion from this page, then we'll move ahead. Like we discussed, 10 acres cost 100,000, right? These 4 acres cost 33,333, and the remaining 6 acres cost that. Now, let's suppose after some time of this transaction, the person sold 3 acres out of these 6 acres. The person sold 3 acres out of these 6 acres. Practically possible? Possible. If the person is selling out 3 acres out of these 6 acres, again, there will be a concept of part disposal. In such times, market value of parts sold, market value of whole asset. For me, now the whole asset is 6 acres. So I need to take the market value of 6 acres, multiply by original cost. For me, the original cost would then be. Is this thing clear? Online side, any question? Thank you. Can I have the feedback from Noman, Hamad, Marhaba, all of you? I'm heading towards the next page in the meanwhile. Thank you, all of you. Let's start with example 2. Ali had purchased a building comprising of ground floor and first floor for 120,000 in August 2004. He sold the first floor for 104,000 in Feb 22. Market value of ground floor was 156,000 on that date. Market value of requirements. You are supposed to calculate cost of parts sold. So cost of part sold would be market value of part sold divided by market value of whole asset. Multiply by original cost. What's the original cost? As a result, cost of parts sold is capital gain. Disposal proceed. Just wanted to ask one thing. All of you guys are in the WhatsApp group of ATX, right? Yes. Tomorrow, no class, okay? Yes. You are not. Aman? No. You guys have mentioned your number on the attendance sheet. I will request Sir Fahim to do the needful. Disposal proceed 104. Cost. Gain amount. Cost of unsold part. I'm doing in the shortcut way. You guys are advised to do it under both methods. Cost of unsold part would be market value of parts sold. Sorry, total cost 120 minus 48 advise you guys to calculate under second method also. 156. And probably this is the last question under which I am calculating under both ways. Any question from this? Copied? Yep, that's correct. Okay. So if for example, you have disposed of 5 assets in a year, 5 assets in a year, and out of those 5 assets, 2 are residential and 3 are normal assets. So you need to make 2 columns for your calculation. One column would be for residential, one column would be for normal, so that you can track on which amount of gains you are supposed to apply 1828, and for normal, so that you can assess on which amount of gains you have to apply 10 or 20. So you know, honestly, this is the point which is exactly addressed over here. It's good that you are thinking in these directions. So this is the answer to your last question. Because here is a saving element. Here it is a savings element, because on residential property, rate of tax is either 18 or 20. For all others, it is 10 or 20. Annual exemption gonna save your tax, gonna reduce your tax. Which tax you want to be reduced? The higher one, which is like residential. So honestly, till this pro forma, considering we are done with only example 1 and 2 till yet, so nothing is specifically presented over here how to proceed with this kind of arrangement. But once we will be doing a formal question, probably, let me see, not rather than make it probable. So on page 14, exam style question, which is a question 1. Here we will be calculating these exactly on these lines which you are referring. Multiple assets, some are residential, some are non-residential. How to calculate the capital gain. So we will be covering this type of thing exactly in this question. Okay, the next discussion is around assets. Let's keep it till here for today. Considering today is the first class, so I want you guys to enjoy the early off for today. So early bird discount, good one. So we will be continuing with the discussion of assets, wasting, non-wasting, and other discussions in the next class. Okay. Thank you very much. Regarding the group, for physical ones, I have the number. I will request her for him to do the needful. For the online ones, I request you guys to drop a message to Sir Fahim. They will add you in the group. He will add you in the group. Okay. Thank you. And first of all, I apologize for this thing that I was unable to share the PDF of today's class before the class. We will ensure from next time onward, it will not happen again. Okay. So thank you very much. Allah Hafiz.